Hello everyone and welcome to ICM's midday session. So today we have, it's very clear in the market that the risk on sentiment is just prevailing following yesterday's optimistic headlines regarding the vaccine and also Trump's order to his team to continue preparation for the transition. So this is just supporting the risk in the market, the risk appetite, and we're seeing this on currency pairs, gold, and stock futures. So in the morning we had some economic indicators from the eurozone, mainly from Germany. So showing that the GDP, the third quarter GDP for Germany was around 8.5%, which is better than expected. Also, the IFO Business Climate Index came out better than expected, but less than previous reading. But this is just also signaling that the German economy isn't having a big of an impact from the latest spread of the coronavirus. So this is just easing investors' woes over the economic outlook. So now let's go to the MetaTrader 4 platform to check the latest on the currency pairs. So we start with the euro dollar, which following yesterday's short decline. So yesterday, what was a key mover or a trigger for the market were the purchasing managers index for the services and manufacturing sector from the United States for November, which they came very strong, much higher than expected, and also better than previous readings. While the market was anticipating a soft reading, especially following the latest rise in coronavirus cases, which was expected to have more impact on the economic activity in the United States. So this was one of the boosters for the risk appetite. So this just supported the fact that there will be no need for massive fiscal stimulus, but then we had a flow to riskier assets, and this is what weighed on the dollar again. So we can see that the dollar gained against other currencies and then lost those gains again. So let's start with the euro dollar. What we're witnessing for the euro dollar now, following yesterday's sharp decline, the market found support exactly at the 61.8%. So you can here see the 61.8%. You can just highlight it again. So this area here as a key coming support area, this low and the previous one between the 50 and 61.8% retracement. While also this rally here just ended at the 88.6. So if you just also add the Fibonacci retracement here, you can see that the market stalled at the 88.6 ratio. So what we can do is just mainly we're back to the same sideways trading. So you can just highlight the previous top and the bottoms as support and resistances and trade any break out of this consolidation zone. So this is just for the euro dollar. Moving to the British pound, also the same thing. So we have this rally to the upside, and then the market is just had a bigger of a correction and now moved higher again. So what we can just highlight on this, you can just add these lines here. Once you have a straight line that shows there are a couple of points that just showing on the line, you can just draw the opposite parallel line, and you can see how the market moves in a certain channel direction. So you can see 1, 2, 3, we got another drop, and then we got another point higher. So these were enough, 3 points, 4 and 5 were enough to draw a possible channel where the market could possibly correct lower. And when the market moved lower, it dropped exactly to the bottom of this channel that's formed here and then bounced away from it. But also this move, the rally was capped by the 88.6 almost retracement. So this is just what's keeping the market. So going back to the current price action for the pound, you can just highlight the previous top 33.98 along with the channel. So any break back below this. So if you just highlight this one. So in order to turn bearish again on the pair, we definitely need to cross back below the trend line, combining the previous bottoms, which sits almost near 32.98, 33 levels. So a drop back below 33 could lead to bigger correction, maybe to another also trend line where you can draw the previous bottoms, which would come somewhere here previously between 32.60, 32.65, which could coincide with the previous bottom. While any further appreciation, the first resistance is near 134, yesterday's high, and then at the trend line 34.30 and then 34.85. The dollar against the Japanese yen, it's also working or trading in a clear channel. So we have this movement here. So what you have to do is just to draw the bottoms here, and then you can just drag this, and you can see this channel, we highlighted it once, 1, 2, 3, 4, and then the market moved sideways. We had a break above it, and then the retracement to the channel, and now we're working back higher again. So what you can highlight as a minor support is the current close, so it was almost previously also key resistance, and also another support at 1,365 where we stalled for a while resistance continues to be near also 104.80 ahead of the 105.60 levels. So these are the key levels for the dollar against the Japanese yen. The dollar against the Swiss franc, so you can just, by drawing this, you can see how the market also rebounded from this point. What you can anticipate, since most of them they are working on the same pattern, you can just draw a channel from these two bottoms, have the stop here, and just wait for some resistance near 91.50, which is also coinciding with the previous tops. So you can see 1, 2, so this could be the coming resistance for the dollar against the Swiss franc. So better watch out for how the price is going to act when we get closer. 91.50, 91.90 coming resistance, while support comes in near the bottom of almost this bottom here near 90.90, and then lower towards 90.60. So the dollar against the Swiss franc. The Australian dollar finally was able to break out of this consolidation zone, capped by 73.40 previously, and is pushing higher again towards 73.65. The coming resistance area could come in near the previous top at 74.15. So somewhere between this range here, near 74 level, could be packed with some selling orders. What you can also anticipate, since we're just drawing these channels, you can just anticipate any move higher, where also the top of the channel could coincide with the previous top. So watch out for any possible resistance near this area here, while a drop back below 73.40 could lead to a bigger correction and maybe retest the bottom of this channel, which is almost near 72.80. The New Zealand dollar against the United States dollar, similar formation. We're still continuing higher. We were able to test the 0.7 for the first time since almost 2018. So this is just bullish for the New Zealand dollar, but also you can just highlight these bottoms and just go for the channel as a possible resistance here. So we can do 1, 2, 3, 4. So watch out for possible resistance near 70.50, 70.15, 70.20, this area here. Because also by just joining the previous tops here, we're almost just trading below it back again. So on the bigger picture, as long as we're above on the small minor level, as long as we're above 69.60, we're still aiming at higher highs. Any drop back below 68.95 or 69 could lead to a bigger correction for this full rally. So you can see this rally just started here. The only clear correction that was what was obvious was this drop here. So watch out for the bigger correction for the full rally. So this is for the New Zealand dollar against the United States dollar. Moving to the dollar against the Canadian dollar, so nothing much happening on this pair despite the oil strength. So yesterday the dollar was strengthening. We were talking about this consolidation area here, and then we had the rebound to another time, and then the market dropped lower, and now we're stuck again at the resistance, which was a key support here. So you can see the break was on strong volume, but now we're just recovering some of the losses. Watch out for the break above this trend line. So if you just go for the 15 minutes chart, that's clear that this trend line is valid. We've been trading on it for a while, so watch out how this will come and play here. For levels, if we just want to highlight levels for the dollar against the Canadian dollar, we're still at 29.87, 29.85, and 29.30. These are the key levels on the downside. While on the upside, any movement back above 31.20 could turn bullish again for the pair and lead the rally above maybe 31.70 again. Gold prices, yesterday we were talking about this channel, and then during the news we had this sharp rally, and then the market dropped, had the retracement to the channel, and then dropping again. So what we can highlight for gold, you can just go to previous levels. You can just set possible channels that we're trading at. We're currently trading at the bottom of this channel. So if you use the tops and bottoms for the last market movement, you can see that we're getting closer towards 1806. Well, we just also another way to just get certain levels, you can just go for the Fibonacci. Try to look for a confluence between Fibonacci and other levels. So you have on the bigger picture, we have you can take the full rally from 1450 towards 2072, or just from the lowest from almost 1673 higher, and just look for a confluence between the Fibonacci's. We have a confluence almost near 1770, so watch out for another possible drop. However, we're just getting into a bit into the oversold territory, especially following this sharp drop here. I'd just like to remind you that this formation here was previously a consolidation before this rally, so we were trading for 2 weeks between 1790 and 1820 ahead of this spike higher. So watch out for some buying orders in this area here. For silver, it's still it's in a better situation than gold. However, we just we were almost breaking below the trend line, combining the previous bottoms. This is just a channel that we also drew earlier, so watch out for a further deterioration for silver. The coming support is near previous bottom at 22.55 and 21.56. These could be the possible support levels for silver, while just we need to go back above 23.80 for a possible reversal and then a continuation higher. For the Dow Jones also, yesterday we highlighted this consolidation move. So we were consolidating below 29,500, and we stated that on a break we could be edging higher back towards almost 29,900, 30,000 level, which we currently are trading slightly below it. So this is just a possible resistance area here, where a break above it could lead to a rally towards 30,500. You can just draw it by drawing the Fibonacci extension. You can set the coming targets on the upside, while on the downside, minor support could be building near 29,800, while the key support again could be around 29,520. This level, which was acting as support, resistance for a couple of times, and then we had a clear rally following its breakthrough. For WTI, we're witnessing a bit of positivity on oil still. It's just lacking other assets, but it's still doing well. Trading near its highest levels since almost March, so you can just set certain channels just to try to have where we could be the coming resistance zone. So if you just draw by like this, you can see this small deviation. It's just could be packed. So these levels here could be packed with some resistance. So watch out how this will come in play. I'm just gonna go to a bigger time frame to highlight key resistances. So this is just today's high, almost near 43.80. And then if we go to the daily chart, we can see that following this, like the resistance previously was key support. So this resistance here was previously key support again. So any break below like this area here, it was a flu area. We didn't have much of a trading volume inside this area for all this time. Like every time for in 2019, we were trading above this range for a while, consolidating above this range. And for 2020, following this dip and then the recovery, we're trading below this range. So watch out for coming possible range trading for a while between $43 and $49, especially as oil producers, they're just looking for more stability in the market. So watch out for this range to be the coming range to trade oil with. Any break or reversal back below the trend lines could just turn bearish for oil, and maybe we could be seeing another drop again. So you can just draw this trend line combining these previous bottoms. So watch out for any break back below 42.50, which is coinciding also with the previous resistance zone that was keeping any move to the upside for a while. 1, 2, 3, 4, 5, and we had a break and then correction towards this zone and then the rally higher. So this is all for today's session. I'd just like to remind you that all the information, news, analysis, and opinion mentioned in this session are just for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. We wish you all safe and good trading, and thank you all for joining.